Like, y'all are not ready for how cute this day is. It is National Puppy Day. Like, I don't know if you can't think that this puppy is cute, like, dang, man, I don't know. But yeah, look at these adorable puppies. Are they not so cute? I love a good puppy. I just think they're adorable. Um, Granted, they don't always act cute, but they are cute to look at, especially on a gift that I can just play on repeat and not have to worry about cleaning up their pee, right? Um, Almost as cute as kittens. No, Galilee, we are not having this fight in the chat. Puppies are the cutest. And Matt, yes, said no one. Puppies are the cutest. They're so cute. So anyways, I get a great amount of joy. So anyone who wants to send me an adorable like puppy, you want to send me a picture of your puppy, I would love that. I've already gotten 12 text messages from my earlier class of people sending me adorable puppies, and I cannot wait to look at them. So if you want to also send me some photos, I'm here for it, and I will give joy merits for anyone who wants to send puppies. If you want to send it via email, you can do that. If you just like I just pulled these from the internet, but it was great fun looking at all of the cute, adorable puppies that happen when you type in cute puppy on Google. Yes, Marley, thank you. Cool. So it's puppy day. I mean, there's not much to say about that except for how cute are they. It is Samantha's birthday tomorrow. So if you know Samantha Flores, feel free to reach out to her and say happy birthday to her. I know she would appreciate that. So yeah, let's jump in. I'm gonna go ahead and jump to our pre-calc slides. Cool, we're gonna jump into announcements, which will be fairly similar things that we remember. And then we'll jump into our notes and assignment. We're learning about investing today. I know we got some experts in the room, but I also know that we have some people who are learning for the first time. So excited that you all are here with us. It's week 11. Yes, we finally made it, friends. It's the last week of the quarter. We have PT and PT 3 and 4, and that is all we have left. Our modules are closing on Friday. So if you have any work, I know there's like a few of us who have like one missing assignment or like one thing that you were like, oh yeah, I'll resubmit that later. If that is you, resubmit it now. That'd be great. And then next week, we're going to have spring break, which will be awesome. Just a reminder that modules are closing this week. English is closing tomorrow. That's our first deadline. And then history, physics, Spanish is Thursday. And then math is Friday. I should actually backtrack. I don't know that this is our first deadline. Can y'all fill me in on what happened in VAPA for performing arts? Deadline is today, but maybe it was extended to tomorrow. But you had to fill out a form, maybe. This is what I've gotten so far. Was anybody in class maybe yesterday and knows what's up?
Miss Ali said she was grading everything like on Wednesday, but I think the last you can submit is Tuesday, so today.
Okay, today. You had a session on mental health. That was on Tuesday, maybe, or yeah, on Monday yesterday. So she moved it. She moved the deadline. Is that what you're saying, Kayla? She moved the deadline. Okay, so it sounds like to be safe, you should just think today is your module closure for VAPA. So that would, it sounds like that's to be safe. It sounds like there's maybe some potential movement on the deadline, but let's just call VAPA closing today. That's like what I would say is the safest way to think about it, just so you don't get caught with like any details. So I would say VAPA closing today, English closing tomorrow, history, physics, Spanish on Thursday, and math on Friday. So if you need to like prioritize math later in the week, that's totally fine. Cool. Okay, and then there was one question from Thursday that I was like, whoa, we should review this really fast. Budgets are generally created for 1 month at a time. So the other answer was a year, and we had talked about like budgeting over the course of the year. You can reevaluate your budget every month, and like once a year, some people like rebuild their budget, but budgets are generally designed for 1 month. So Just wanted to review that real fast. And then finally, I just pulled up like the last 5 assignments. If your name is on this list, no harm, no foul, no big deal. Just a reminder to either submit or resubmit, especially because some of us like might have, they might be things that like I made a comment on Canvas and you're just not getting full points. So if your name is on this list, do go ahead and check out those places where you can turn in those assignments. Are there any questions for me regarding announcements, module closures, things that we need to submit, anything, grading? No question is too small or too big. Okay. Feel free to keep typing those questions. I am also going to jump us to our lesson for today. Let me first go to PT Task 3. If you're just joining us, our assignment is here. If you can make a copy, because we're actually going to fill in this table during the notes today, and I would love for you to have it already like open. So make a copy so you can fill in the table. You guys like my songs for today? Sometimes when I'm talking to silence, I just sing. It's just what happens. It's true. I do have talent. They should put me on. I heard there's a new show, America's does not have talent. I feel like that's the show I should be on. Like not a real talent, just like, you know, a sing song voice. Okay, great. All right. Intro to investing. I am super, super, super pumped to jump in here. I'm going to put at the top, I am not an expert. I am not a financial advisor. I did not go to business school. And I'm not a financial advisor because I'm a teacher. So I just want to put at the top that like, this is a caveat that everything I say today it is like things that I have found from legitimate sources, but I'm not an expert. So if you ask a question and I'm like, yo, I have no idea, I'm just gonna like normalize that it is okay for us to not have all the answers. And we can Google it together, or I will just say, I don't know, and then we'll talk to someone who does know. So I know there are some people who are currently investing or currently like a part of this process. Can you just like jump into the chat and be like I know some things about investing. I don't know some things. Gally, can you post the attendance link one more time, please? Let's just get a, thank you, Gally. Let's actually do this. Let's jump into a poll. How much do you feel like you know about investing? Like 0, you don't know anything about investing. 5, you know, like a ton about investing. 2 is like, you know, a little bit. So wait, you know what you need to know. Great. Hopefully we'll teach you something, a little something about what you know and don't know. Okay, cool. So I'm gonna share out the results. Just like this is where we're at. We're feeling like we're like 2s. Like we know some things, we know what we need to know, but we don't know everything. We have a couple experts in here who like are sitting at that 4, and a couple people who are like, I don't know anything about the stock market. So that's cool. I am here to share with you that the stock market is not the only way to invest. So we're going to talk about some other ways to invest as well. Some that are a little more risky, some that are a little less risky. Okay. Are there any questions at the top? Like if this is like your burning question, like the one thing you want to know about investing. One thing you want to know about investing. If you send me those questions, I'll make sure that I answer them throughout today to the best of my ability. All right. I'll leave like open parking lot, send me your questions as they come up. Cool. All right. So you have your assignment. Your notes as always, you can type them in this box. I'd probably recommend that today, since we are going to be typing in this section here. You'll just be like getting part of your assignment done as we are going. But if you want to write it down on paper, you're more than welcome to. Like you want to make a separate document, totally. However you are most interested in doing that, it's fine with me. And then we will jump in. Our activity today is that little box, so we'll make that happen. So some questions that you might be thinking: when can I start investing? Some of you already have started. What options do I have for investing? Like, do I have to use the stock market? What is a crop commodity? I was very impressed by this question. I'd never even heard of crop commodities. So I was like, oh, I should do some research. So we are going to answer that question. Am I required to invest at some point in life? And my argument will be that like everyone does investing. Some people do it in like a serious way through the stock market. Some people do it in a, like through their savings account. But almost everyone invests at some point in their life. Okay. Our goal is to answer these questions. We're going to answer a lot more questions as well, so feel free to type in. So, investing 101, and this is a good place to start taking notes. Investing, just like in general, right? Investing is buying something or obtaining something that can make you more money over time. So the whole point of investing is if I have $100 bill, right? If I have $100 bill, I want that $100 to be more than $100 in the future. I want my money to make me more money. That's the whole goal of investing, right? You want to have more money than you started with. It's going to take time, right? So if I have $100 today, it's not going to be $200 tomorrow, right? If it is, that's a very risky investment, right? Because if it goes up really fast, it can also go down really fast, right? The idea is that over time, I am going to have more money than I started with. So it might go down, but then it might go back up, right? Many people start investing between 20 and 25, right? But they're often investing into retirement accounts, and those retirement accounts don't become live until they're 65, right? They're 60, like when that's like 40, 45 years between starting investing and really capitalizing on the cash that's coming back. There are a lot of people who are like, man, I should have invested in that one thing when it first started, right? Like Apple, Google, Tesla, Bitcoin, like all of these different things that you're like, wow, like those are worth a lot of money now, right? But I would remind you that when those things started, there were other things that didn't make it into becoming Apple or Tesla or Google, right? Like there were other companies at that same time. So like, let's say like Apple, like 1985, right? Apple in 1985 was a baby company, right? There were other baby companies at that time who were valued similarly to Apple, and people invested in those as well, but they did not become Apple, right? So in the same way that there's like lots of money coming in there's lots of money coming into certain companies, there's also certain companies that don't exist anymore, right? And those people lost their money, right? So it's a very interesting like process. There's also an idea of like going up and down, right? That like generally over time, we're hoping that it goes up. But when you invest in things, you have to also understand that there's a lot of risk involved. You can start investing when at 18. That's when you can take like sole proprietorship of your investments, right? There are people who are currently investing who are 17 or 16, and that often has to do with like parental involvement. Those of you who are currently investing, I don't know if we have any, I'm sure we have some 18-year-olds, but those of you who are investing below 18, if you can tell us in the chat how you got started or like what that looks like, because technically you're not allowed to like officially be in charge of all of your own investments until you turn 18. Would love to hear any personal, yeah, custodial accounts. Devin, are you able to come off mute? Do you want to tell us about a custodial account? Not to put you on blast. It's okay if you can't come off mute. 1 sec. Great.
I'm not currently home right now, but I can speak on it. So it's my custodial account was set up, so everything falls under my dad's name. When I turn 18, and once I'm 18, it all goes to my name.
Cool. Yeah, thanks, Devin. Right, so custodial account, I'm going to spell that in the chat for y'all. A custodial account is exactly what Devin just said, right? It's like technically his dad is in charge for right now, even though Devin's probably running things behind the scenes. But then when wow, that did not work. Sorry, everybody. I'll just spell it. Custodial account. His dad is currently the custodian, right? He's taking care of it for right now. And then when Devin turns 18, it'll be in his name, right? So custodial accounts are how you can do that if you are younger than 18. And then there is another version of it. There's something else, another name for it that I'm blanking on. But you can also do that if you're under 18. But for you to be like the sole proprietor of your stocks, you have to be 18 years old, which is cool because you don't have to be 21, which is sweet. Cool. So we're going to spend the grand majority of our time on this page here. These are the different ways that you can invest, some of them being stock, right? But there are also other ways that you can invest your money, right? Remember, the goal of investment is that my money is making me more money, right? So we have a few ways that we started talking about last week, and one of them is a savings account. Savings account, very low risk, but very low reward, right? I have $100. We're going to call this my $100, right? I have $100. I put it in the bank. I get very low interest probably on my savings, but I do get interest, right? So at the end of the year, if I just put $100 bill in my bank account, at the end of the year, I'm going to have more than $100. I might have like $100 and like 35 cents. It's not a very great investment, but in terms of like making more money, but it is a good investment in terms of like, it is not risky. Like there's no chances that I'm going to have less than $100, right? So it's very low risk, really like no risk, right? There's also something called a CD, which is a fancy savings account, basically. And basically what you're saying is like, I'll give you this $100 and I'm going to put it in the bank for a minimum of 3 years, maybe 3 years or 5 years or 10 years. Basically what I'm saying is like, I'm going to put this money in the bank for a certain amount of time. And in exchange, my bank is going to give me a higher interest rate, right? So I'm going to put, basically I'm like saving this money for myself for later. And I can't touch it. If I touch it, there are some fees, like I can't withdraw it. So I don't want it to be like your emergency fund doesn't go into a CD, right? Because then when an emergency happens, you can't get to it, right? This would be like additional savings that you know you're not going to need for a little while, and that you want to earn a higher interest rate, okay? Also very low risk. The only risk involved there is if you for some reason have to touch that money, then you might like cause yourself to reach a fee, right? So that is the only risk there is like an emergency. And then other low things that kind of savings, but kind of stocks, kind of about it. I don't know. We didn't really know where to put this one, Stephanie, as we were working. So government bonds, basically what happens is you lend your money to the government, right? These were very popular in like earlier in our country's like time period, especially during wartime. Basically, you lend money to the government and then the government pays you the interest on a semi-annual basis. What does somebody help me? What does semi-annual mean? How often is that? Semi-annual. How often is semi-annual? Yeah, half a year. Good job, Brandon. Half a year. So semi meaning half, annual meaning yearly, right? So this is half yearly. So every 6 months, the government pays you back your money. The government pays you interest, like a very small amount. And then at the end of the term, maybe it might be 10 years, 20 years, or 30 years. At the end of that time, they give you your money back, right? They give you your money back. I'm getting a notification that my internet is unstable. Am I glitching? A little bit. A little lag. I'm sorry. I'm sorry, friends. Okay, I will I don't know what I can do. I can do nothing, but I will just be sorry. My apologies, friends. Okay. Well, so those are the ways that you save your money. These are all very low risk. You're going to get your money back at the end. They're also very low reward. You're not going to get a lot more money than you started with, right? Then there are also stocks, right? So stocks, in general, this is the general idea. If you have a publicly traded company, right, what happens is the company is broken into little baby pieces, right? Those little baby pieces are owned by different people. So those little baby pieces are called stocks. You buy a stock at a certain price, and then your goal is to sell that stock later for a higher price. So for example, Apple, if I buy a stock, let's not do Apple actually, let's do Snapchat. Snapchat a year ago, right? Right now it is valued at $58, right? There's like an exact amount, but like Snapchat right now is worth $58, right? A year ago, it was worth $11. So if I bought Snapchat 1 year ago at $11 and I sold it today at $58, I would make what, $47 profit, right? $47 profit. Like a month ago, it was worth $73, right? It was worth $73. And like, so if I had sold it a month ago, I would make more profit, right? If I sell it a month from now and it goes down lower, right, I might have less profit. And if it ever goes below $11, let's say it drops to $5, that would be how I lose money. I lose $6 on that investment, right? So like how the stock market goes up and down is how people lose money. It's okay when it's only $11. Okay, like it's $11, like I made $50, like NBD. But imagine if I had bought like $10,000 worth of stock, right? And it turns a 4 times profit. Now I'm picking up $40,000. That'd be awesome. But if it drops, right? If it goes up to that amount, I would absolutely want to sell it, right? Because then like I can turn a $30,000 profit, right? The problem becomes if I invest $10,000 and the stock actually drops, I'm actually going to lose thousands of dollars, right? If it drops down to $5,000, I've actually lost that money in that process, right? So that's painful. That's why people get so obsessed with the stock market, is because like that's real money that's going up and down, right? And so people get very worried about their futures, etc. In general, the stock market is on an incline, right? But there are certain times, 2008, obviously 1929, you all are learning about in history class, like when the stock market crashes, those are like big moments. And also like somewhat recently in 2020, when the stock market goes like really down and all or most stocks are going down, right? That's when people get really anxious because that's actual like their own money like dissolving. So that's why people get anxious about the stock. It is a very risky scenario because as much as it can go down, it can also go, or as much as it can go up, it can also go down. And so what people do is they invest in what's called an index or mutual or retirement funds. These are 3 different things, but I think about them in like generally the same idea. The general idea with these is that you're buying a group of stocks that all balance each other out, right? So the idea being that like you're investing in a large portion of the market. So like if JetBlue goes up and Snapchat goes down, they balance each other out and you don't lose as much money, right? If one goes really, really high up and one only goes a little bit down, then you actually make money on that. And that's the general idea of these index or mutual or retirement funds, is that like you go into this with like a group of stocks, and with mutual funds, a group of people all bet on the same companies, right? And that helps to drive the investment up, right? That helps to help you make more money. So there's a little bit less risk involved in these types of funds because that risk is being balanced out. Okay. So those are kind of your like two major ways. Individual stocks like go up, go down very quickly. And then index and mutual funds generally go up, and a lot more slowly, actually. These can be managed by individuals, like people, stockbrokers, or like an account manager. But they also can be run by computers. So sometimes there are some that are like, I think I have a few like retirement fund things that I have a manager, right? But then also she uses a computer in order to make sure that she's making the best decision for that thing. So very interesting. That is like, I think how most of us think about investing. There are other ways that you can invest. Remember, the idea of investing is just my money is making more money. So there is also cryptocurrency, which y'all have probably heard of, like Bitcoin. There are also like other methods. It's extremely high risk because it's not necessarily backed by like banks or by like large organizations. You may have seen it go up really fast, but it also crashed really, really fast, right? So if you're someone who bought Bitcoin, 10 years ago, you might be in a really good place. But if you bought Bitcoin when it was at a high, you might actually be like in the negatives in terms of like losing money. So Bitcoin, extremely high risk. Cryptocurrency, we don't really know what it is, but basically you take your real money, you turn it into computer money. But the future is unclear on whether that is going to pay off in a big way or not pay off in a big way. There's also crop commodities. Basically, you are buying and selling crops like wheat, corn, cotton, like oil even is a crop. You're trying to buy those things and then sell them at a higher price. Same idea. The reason why this is a high risk is because it's based on the weather, right? Imagine like you have basically like a plot of land and you're farming, or like someone is farming for you wheat, and then a tornado comes through, right? Then like you lose all of your profit, right? So it could be really cool, but it could also be very risky. And then the last one of like stuff that you can buy is property. So buying a house, buying land, buying rental properties, buying a storefront that you can actually rent out and get your money back. Those things are also risky because you are now thinking about tenants. You're still thinking about like you always have to have someone in there in order to be able to turn a profit, that type of thing. So property can also be fairly risky, but also has pretty awesome rewards. Like some people if you bought a house in Los Angeles 20 or 30 years ago, your house is probably worth 4 or 5 times as much as you paid for it, right? So if you've spent $200,000 on a house in LA 20 years ago or 30 years ago, that house is probably worth close to $1 million now. So property is definitely, I think, buying a house or land is potentially like a good middle ground, but it's a good investment. Does anyone know what property is not a great investment? Does anyone know what property is not a good investment? Any guesses? It's actually not on this list. Yeah, a car. A car is not a great investment. The reason why is because the second you buy a car, like every mile you put on a car, the car depreciates in value, right? So you have to keep putting money into your car in order to make it an investment, which it's not great because every time you drive it, you are depreciating its value. So would not say that that is a good investment. All right. Some of you are thinking like, okay, I want to do the stock market. Like, what can I do? There are a few apps that you can get invested in. E-Trade, Robinhood, Acorns, TD Ameritrade. I know there's another one that I can't remember. If you are currently investing through an app, if you could drop the app name in the chat, I'm sure people would really appreciate that. I use Robinhood, which is one of the ones that was like in the news because of the GameStop idea, or because of the GameStop like news. but I've used Robinhood a couple years now. One thing to be careful of is no matter what you choose, number one, talk to your parents, right? Even if your parents don't really know very much about investing, right? They understand what money is. They understand where money comes from and how hard it is to come around money, right? So definitely talk to your parents and make sure that they are like okay and understand what you're thinking about. Also, just because it's a good idea to have some financial like conversations with your parents as well. And then number two, I would say check that the app is legit, right? Like there are lots of scams out there, and I do not want us to fall into those scams. Just like we wouldn't want to like use our debit card in a sketchy place, we also don't want to like put our money into the internet in a very sketchy way, right? Like doesn't want to make sense. So make sure that you can Google them to see like who else uses them, how often they're used, the business credit union, like you can like check out how they are legit. I would definitely recommend using one that has like a lot of the news talking about it, because or like that has articles like from legit sources written about it, because that will help you to understand more about where it came from and why it would be legit. Yeah, Robinhood also provides tax docs. I think all of the apps have to now, but they should be able to give you a tax document. So when you actually do your taxes, because when you make money off of the stock market, you still have to pay taxes. And so getting that information from the app itself is super, super helpful. So that is this. And then I just wanted to say, this is something my boyfriend and I were actually talking about. He does a lot of like financial things. And the disclaimer is this: be mindful of where you get your information from. That's why I started this conversation at the beginning. Like, yo, I am not a financial advisor, right? I might know some things about money and have some personal experiences, but I am not like really financially like educated, right? Didn't go to business school, etc. Right? And we've been noticing recently, I don't know if y'all have noticed, have y'all seen like the TikTokers? I've been like on TikTok or Snapchat or Instagram, seen like influencers who are like, buy this stock, like do this right now. You gotta have Tesla, or like you gotta like, oh, like this stock is like trending upward, like check this one out. Those people might be cool, and they might have like a vision for like what the stock market looks like. But I would say a couple things. One, just because they're standing in front of a Lamborghini does not mean that they own that Lamborghini, nor does it mean that they got that Lamborghini from the stock market, right? Like one, that Lamborghini could just be on the street where they live, right? Or that like they could have rented that Lamborghini so that they look wealthy, right? Or like, I don't know, any number of scenarios, right? It could be a picture for all we know. So be very careful that you're not just like assuming that someone is legit based on how they put themselves forward on the internet, right? It's actually pretty cheap to look rich on the internet. So just like FYI, if someone starts to pressure you, maybe think about like, why are they pressuring me? If they just want me to make more money, like there shouldn't be any pressure in that, right? So think about like their own biases and the things that they're trying to like push. Seek a financial advisor. This is like actually something you can like go to college for. You can go to college for financial advising. You can go to business school and learn about this stuff and like learn about these things. Become someone who like knows lots about these things. Become a stock broker yourself. And so research where you're getting your information. And then I loved this analogy from Stephanie. She was like, okay, so this is basically the same as like if you've watched all 17 seasons of Grey's Anatomy, right? And like, let's say I'm having a heart attack, right? And you're like, oh, it's cool, I can operate on you. I've seen all the episodes of Grey's Anatomy, right? Would you let that person operate on you? Like, heck no, man. You know you can do a Whipple stitch. Yeah, Marley. Okay, whatever, right? But like, if you've watched all of those episodes of Grey's Anatomy, that does not make you a doctor, right? Just because someone is looking at a lot of stocks and information and they've seen a lot of it does not make them a financial advisor, right? Like every day I look at stocks, but like I am not like educated in a way that can tell you like what to do or how you should do it. And so like don't take financial advice from a fake investor. So that is my like big disclaimer for this idea here. Okay. Even if they've watched all 17 seasons of Grey's Anatomy. So big disclaimer, be careful where you put your money. In the same way that you would be careful, you wouldn't want to like give your phone number over or your like credit card number over the phone. The same idea here is like there's a lot of scammers out there who get rich really fast from using from like pressuring you to do something like put your money in a certain place. So with that disclaimer, are there any questions? I'm sure that there are lots of questions. What questions do we have in terms of investing, thinking about things? Even if you have like a situation that you've heard of that you like are wondering about, anything that we got here. And for people who are currently invested in the stock market or currently investing in something, I would love to hear from you if you have any like words for the wise, any advice for us. Awesome. Yeah, some advice. Don't buy the big name companies first. Yeah, focus on the little ones for sure. That's why I bought Snapchat. I bought Snapchat maybe 2 years ago, which like honestly, I didn't think they were that little, but they were in terms of like a publicly traded company. They were pretty inexpensive, right? So I bought Snapchat to start with, but that was because they weren't yet a big name company, for sure. So when you're thinking about stocks, I can kind of show you what it looks like. You can look at a stock. Come on, computer. There we go. You can look at a stock like over time. So like this is how Snapchat is doing today, right? This is after a week, like over the course of this week, it's doing better. But if you look at it over like 1 year, right? Like it was down here last March and this is where it is this March, or 5 years. This is 5 years. So Snapchat was actually not doing that well for a very long time until this past year, right? So for the first year, it didn't really exist. This is when it started existing and then went down and then back up, just like that. So really interesting. One question, what happens if the stock goes in the negative? Stocks don't really go in the negatives very far because they kind of like blank out at zero. But basically, as the stock goes down, you're losing money, right? So sometimes stocks will like stick around and see if they can kind of like go back up. And then sometimes companies go bankrupt and everyone loses all of their money. It's just like gone. Like that's a part of the risk. So like if you think about like when companies go under and go bankrupt, right? What some of the problem is that some of the reason why a company goes bankrupt is because they have to pay out their investors, right? So they basically they cash it. So like when something goes, let's say J.Crew, right? J.Crew goes bankrupt, they sell everything they have and they pay back their investors. And then any money that they have left over usually goes to like legal fees or giving more money to their investors, because most of the time they're not making back the money that they put in. What is my opinion on the S&P 500? Yeah, definitely. Ms. Wall definitely has told us this in the past. S&P 500 is an index fund. It's great. I mean, it's a good place to start. You're not going to make a lot of money very fast, right? It's an index fund. So S&P 500 is like you're investing in the top 500 companies in the stock market, from what I understand. And so you're investing like a little bit into lots of different companies. So when one company goes up a lot, you're only going up a little bit because you only have a little bit of that company, kind of thing. But it does appreciate some of that value. Over time, it's an amazing investment, right? So like over 10, 15, 20, 30, 45 years, it's a really good investment. And that is why like a lot of retirement funds use an S&P 500 because because over time it will make you more money. So I think definitely like investing in some They're sometimes called ETFs as well. There's lots of language, but generally they're like groups of stocks. I'll have to ask a question. How's Miss Wall doing? Miss Wall's doing great. She's doing really good. Her baby is due in June. I think her baby's actually due on her birthday. So she's doing great. I saw her last weekend. All right, friends. If you have any more questions, I'm happy to answer them. Your PC task 3 should be very, very easy. You already have your notes. Hopefully you jotted down just like pieces of the table in here. The slide is linked if you need that slide. You're just answering 2 questions. What's something important to remember if you're going to start investing? And then tell me something you learned today. And then you literally just have the quiz and a space for questions. That is like totally it. That's it. If you would like to head out at this time, it is 10:30 and you should do that. Have a great time in Spanish. If you have a few more questions, feel free to stick around. Anyone here from Jimmy? Bye, Miriam. I've heard of the stock market being referred to as a bull market or bear market. What does that mean in terms of the stock market? You know what, Jimmy? I don't really know. Miss Yama, do you know? Bull market versus bear market. I have also heard those things. Bye, everybody. I've also heard those things, Jimmy. And this is what I would recommend doing. Difference between bull and bear market. Because honestly, I've been wondering that too, Jimmy. So let's find out together. A bull market occurs when securities are on the rise. A bear market occurs when securities fall for a sustained period of time. Okay, so securities are stocks, basically. So a bull market is when it's like going up and up and up and up, like when the stock market is on the rise. So I'd say like right now we're in a bull market because we like dropped really low. A bear market occurs when securities fall for a sustained period of time. So I'd say like last March, like February, March, when the stock market was like, wow, like super duper low and it was low for a while, I'd say that's a bear market. And I would imagine that basically what they're going to tell us is that a bear market, or like when it is low, right? When it's a bear market, that's a good time to buy, basically, as long as you like don't need your money, right? Because the stocks are like at a lower price, right? So stocks are at a lower price, and then when it goes up to a bull market, then you can sell. But let's see. When investment prices are on the rise versus confidence is soaring, right? So I think like this is a big part of it, is all about like how people feel about it, which is that like in a bull market, people are like, yeah, the stock market's doing great. It's always going to do great. And people forget that the stock market is probably going to go down again at some point, right? People forget that like the housing crisis, like when like the real estate market dropped, like people had gotten really confident that it was always going to be awesome, and then it wasn't actually, and then like it dropped, right? So throughout history, the bulls in U.S. markets have had some great runs, starting with the boom after World War II that exceeded the market's peak before the Great Depression. So sometimes what happens is like we're here, and then it like drops like Great Depression time, right? And we were up here before, it drops like this, and then it actually returns higher, right? So we saw that in 2008. We saw that during World War II, or like right after World War II. And I think we're seeing that now in terms of like there was a pretty low dip in 2020, and now like the stock market is returning to where it was in 2019, right? So it's returning and like likely will like go above it. So I think it's just like literally a way to talk about like optimism and pessimism in the stock market, bull versus bear. It comes from somewhere. I don't know. If I find where the names come from, I'll let you know. Does that make sense?
Yeah, that was really informational. And wait, so is it better to invest when there's a bear market since the stocks are lower?
In general, yeah, there's like the idea of like buy low, sell high, right?
Mhm.
So like buy low means like when stocks are like, so okay, let me give you a real life example. In March of 2020, I was like, all right, I have some money to invest. The stocks are like trash right now, right? So like I especially wanted to buy like airlines, because I really believe that airlines are going to come back, right? In 2020, JetBlue and like American Airlines and United, their stock was like, whoa, way low, because everybody was like, oh, like nobody's going to be flying, like COVID-19, like they're going to have to spend all this extra money to clean their planes, blah, blah, blah. And I was like, well, I'm in it for the long haul. And I don't believe that people are going to like stop flying by airplanes for the rest of my life. Like that's not a reality, but people are going to get back in airplanes kind of thing. So I bought like American, United, like I bought like a bunch of airplane stocks. And because of that, like those stocks were like, you know, whatever, $11 or something, right, for that stock. And now that stock is like on the rebound. So it's going to be worth more very soon, kind of thing, if that makes sense.
Yeah, that did. Okay, that's a better understanding.
Yeah.
Add. I just
Yeah. Go ahead. Sorry.
I just like I kind of better understand this bear and
Good.
bull, so that's good.
Yeah.
I think this
Yeah.
bear and bull thing is just like a general understanding. Like Miss Max said, you want to buy low and sell high. And there are different types of trading when it comes to stocks. You can also do day trading where maybe like the stock rises, like like most recently the example I can think of would be like GameStop, right? And then or you can do long-term investment, and that's why like S&P 500 will be really good. So look at your intention, and then you can kind of manipulate the bear and bull, like depending on that. Yeah, there's no like one way of doing stocks.
Okay. Yeah, I'll do that. I'll look into it. I kind of been interested in investing, but I don't know, kind of hesitant because what if it just falls and I'm like, oh no, my money.
Yeah. Yeah, David, I think like that's why people have a mixture of investments, right? If you think about like all of these different things that you can invest in, like some people, like obviously, I don't want to put all of my money into my savings account, then I'm never going to I don't have the chance to make any more money, right? But I'm also not going to put all of my money in the stock market, because then, like, what the heck, man? What if I have a bad day, kind of thing, or a bad year, or a bad 10 years, right? That could happen. So I'd say like the best thing is, they call it diversifying your portfolio, right? You want your investments to be diverse, right? You want some to be in savings, and some to be in the stock market, and some to be in index funds, and some to be in S&P 500, and some to be in property, right? If you have that much money to like spread around, that's a really good idea. Jimmy, when I was starting, I started with like $10. Like I was like, okay, let's buy. It's like you can buy stocks. Like there are stocks that are cost like 50 cents. There are stocks that cost like $5. There are stocks that cost like I think Alphabet, which is Google, is worth like $1,200, and Amazon's worth like $2,500. Like there's like a huge span, like thing. And you can start with like a baby amount, and just see what happens, right? But I would say like for now, I would start with like an amount that you are willing to say, like, if this money just disappears, I'll be okay with that, right? Maybe like $5. I'm willing to play with $5, $10, $15, right? But I'm not willing to play with $500 at this point in my life, right? So like maybe, so you choose your level of risk.
Okay, yeah, I think I'll think about that.
You have plenty of time.
Yeah, I do. I wonder what will rise when I'm turned 18. Let's see how the stocks look like.
Yeah. Yeah, it's kind of fun, right? You're like, what if I accidentally, that's always how I think about it. What if I
Like,
accidentally buy the next Apple? Cool.
I know, right? I'll be a millionaire. But I feel like if I, because I know myself, I can get a little bit, um, I can start gambling. Like I have that influx of like, I wanna do more. Give me more. Like I have that addiction.
You have a little bit of a tendency.
Yeah, to like want more. And so
Mhm.
like I try not to. And I feel like if I do this, it's just gonna be like, well, let's try again, or let's try again. Let's do this, let's do that. And I'll be like, uh-oh, I accidentally did a whoopsie.
Yeah, so maybe that's a part of like bringing your parents into the conversation, is like inviting some accountability, or thinking about too in terms of your budgeting, what we were talking about last week, right? Is like, okay, like I know that, and maybe like this is like your wants section, right? So like you have your savings section, you have your needs section, and then maybe like with your 30% wants or whatever, maybe that's the money. And then like when that money's gone, like, okay, that I think like that's the best way. Like if you're gonna gamble, if you're gonna go to Vegas and like have fun gambling, right? The best way is to like walk in with a certain amount of money and just like know that you are not going to spend any more than that, right? I think that's for me. Like if I go to Vegas, I'm like, all right, this is my $200. This is the most that I'm spending for the weekend. This is my like allowance for the weekend, and I am not taking out any more money than this 200. And I'm literally just going to be happy if I come home with $200. And I'm going to be like not that upset if I come home with $0. But I'm going to be very mad at myself if I end up spending $1,000 at like in Vegas, right? Like that would be insane for me personally. So that's my thought.
Yeah, you know, make sure you don't overspend. One of my college friends, one of his like baseball teammates went to Vegas, I think at the beginning of the pandemic. He lost an entire month worth of rent. So it was still when like school was happening, and then we would see that friend of his like going through Uber Eats drives because he didn't have enough money. So always make sure you don't budget it like that. Always make sure you have like a bottom line where you don't spend, and you know, have that as your like stopping point, even if you lose money. So it's really good to set like a percentage usually. Say like if I lose more than 10%, I'll stop there even though like I'm losing. Just always make sure you have a stopping point no matter what.
Yeah, helps to talk about it in advance.
I feel very bad for him. I hope he's doing well. um, but yeah, I think I know I'll probably be more responsible and like saving.
Mhm.
Like I'm probably gonna do that more often because I can be a spender, but I know that I can handle myself, like in terms of budgeting on myself, because I can be frugal sometimes. And like I feel like I always think about it like, do I really need this? Like why it may have all the features, but I have this other like I have my phone with me. And so I had an old phone and I'm like, oh, I should I really get a new phone? I basically have a phone that does everything. Should I really be getting a new phone right now? And so like I've been stuck with the my S10 for like 2 years, and then my brother just got me a new phone, and I'm like, uh, because I was
You were
like,
like, thanks, but also like, I don't know if I needed this.
yeah, I don't think I needed this, but thank you, I guess.
Yeah. Wait, but
I
is
mean,
it the
I was
waterproof
happy for
one?
like, yeah, it's the water. Ooh, I almost
Is
dropped
it
it.
like, wait, I have a question. Is it like is it actually waterproof?
Oh, it's just water resistant. So like basically what they mean by IP rating is like it's resistant to some type. It's not waterproof or like water
Sure.
resist. It's more water resistant, but it still will get damaged.
Got it.
Um,
So like don't dump it in the ocean, but like it could go,
definitely.
it can like get
It'll
some water on it.
survive. It'll
Yeah.
survive, but it's gonna be damaged.
Got it. So like my Apple Watch is like that, right? Like I can go swimming with it, right? And it's not gonna be a problem. But if I drop it into like, because a lot of it is about pressure too, right? If I
Yeah.
dropped it into the bottom of like it's water resistant up to like 5 meters or something, right? So like if I drop it, 25 meters, it's not gonna probably far.
Sorry,
But
miss, you're lagging.
Oh no, the lag is brutal. Okay, well, anyways. Thank you for telling me about your phone. And thanks for learning about bull and bear markets with me.
Yeah, miss, no problem. I really enjoyed this. I learned something new.
Yay, good. Good.
But yeah, thank you so much for this lesson. I was actually pretty excited for this PT once I saw a lot about this because I was kind of like, I didn't know if I was gonna learn this like in my adult life. Like I would have to learn this myself, but now that I'm learning about it, it's really like a relief that I have some knowledge about this because I didn't have any back then. So yeah, this was really appreciative, and I really enjoyed this PT. So thank you so much for
Yeah,
this.
you're welcome. I'll pass it on to Stephanie. She'll appreciate that.
Um,
Yeah.
yeah. Thank you, Miss.
You're welcome.
Miss Mac and bye, Miss Yama. Have a great day.
Bye. You too. Bye, Jimmy.